Support for today's episode comes from Amazon. Amazon is working toward a carbon-free energy future, doing more with less, investing where it matters most, and supporting communities where we operate. Power, water, permits, and capital are now one constraint. For years, executives could treat power, water, permitting, and capital as separate planning variables. Each had its own team, its own timeline, and its own workaround. That separation is breaking down, and the organizations that understand why will make better decisions in Q3. Power, water, permits, and capital are no longer four separate constraints. For major projects entering Q3, they have become one decision. When demand for energy, land, water, and infrastructure grows faster than the systems built to support it, the variables executives once managed in separate functional lanes begin arriving together. The constraint isn't in any single lane. It's in the intersection, and the organizations that understand that shift will make better decisions in the second half than the ones still assigning each problem to a different team with a different resolution path. A manufacturing expansion can run into an interconnection delay, a water review, and a financing reset in the same planning cycle. A data center can secure land and still be slowed by grid access, public opposition, or water scrutiny. A renewable project can clear one approval and still fail to reach a financeable construction date. None of that is a run of bad luck. It is what happens when the systems that infrastructure depends on have been consistently underfunded while demand for them has surged. That is the operating condition Q3 begins in. Power is no longer just a utility question. The U.S. interconnection queue remains one of the clearest signs of system strain. Lawrence Berkeley National Laboratory's queued-up dataset reported that, as of the end of 2025, more than 2,060 gigawatts (GW) of generation and storage capacity was actively seeking connection to the grid, with most projects ultimately withdrawn, and those that are built taking longer to complete required studies. The scale of what's in the queue is only part of the picture. PJM announced on April 29th that 811 new generation projects totaling 220 gigawatts had applied to connect through the first cycle of its reformed interconnection process, serving 67 million people across 13 states and Washington, D.C. PJM also noted it had processed more than 300 gigawatts of projects since 2020, resulting in 103 gigawatts with signed interconnection agreements, with many of those projects either not being built at all or slowed by state permitting and supply chain backlogs. Between 2024 and 2030, PJM expects electricity demand to increase by more than 30 gigawatt, driven largely by data centers, with demand growth outpacing new supply additions. For executives, the implication is direct. A power strategy based on eventual access is not the same as a power strategy based on dated, financeable capacity. Projected commercial operation dates are increasingly viewed as soft targets rather than financeable milestones. The queue is not a waiting room. It is a filter, and organizations that enter it without understanding that distinction are building capital structures on assumptions that may not hold. Water is moving onto the critical path. Water is becoming the second infrastructure constraint in markets where power has already dominated site selection. The issue is most visible in data centers, but the pressure extends to manufacturing, industrial operations, and any facility with significant cooling or process water needs. Capacity's June 2026 analysis was direct. The window for treating water as a secondary site consideration has closed. For developers entering greenfield sites, water permitting timelines, local hydrological studies, and community water impact assessments are now on the critical path alongside grid interconnection. More than 40% of planned and existing data centers sit in areas classified as high or extremely high water scarcity. The Fort Meade decision, halting a project due to water permitting constraints despite local approvals, demonstrated that consumptive use permitting is now outcome determinative in some jurisdictions, with water availability effectively controlling project viability regardless of other approvals already in hand. Climate Solutions Legal Digest's April 2026 analysis noted that water permitting timelines now rival or exceed electrical interconnection queues in some regions, with prior appropriation states adding a further complication. Newer water users face curtailment first during drought, making long-term operational certainty difficult to achieve, even when rights are secured. That does not mean every project will fail. It does mean water can no longer be treated as a secondary site consideration. And companies planning large facilities in water-stressed regions need water availability, cooling design, and community impact built into the original site evaluation, not discovered during permit review. Permitting has become a strategic variable. Permitting used to sit in the background of project planning. It was important, but often treated as a process to be managed after the main commercial decisions were made. That approach is increasingly risky. Nixon Peabody's May 2026 site selection update found that power access alone no longer ensures project viability, pointing to legislation, regulation, utility cost allocation disputes, and local opposition as factors reshaping where and how projects move forward. More than 300 data center-related bills have been filed in more than 30 states, alongside more than 12 moratorium bills and more than 140 local groups working to block or delay projects. The firm's conclusion: 2026 marks a repricing of execution risk. Market entry is now measured not just in dollars per megawatt, but in legislative, regulatory, and political risk, community acceptance, operational transparency, and ratepayer protection commitments. That is the real shift. Permitting is no longer just procedural. It is political, operational, and financial. Projects now need more than a strong technical case. They need a credible explanation of who pays, who benefits, how local impacts are managed, and whether the project can hold community trust long enough to get built. Developers arriving with transparency and community benefits are winning approvals. Those arriving with secrecy are meeting zoning denials. Capital is available, but it is more conditional. This is not a capital shortage story. Capital is still moving into energy, infrastructure, and industrial development. But capital is becoming more disciplined about physical constraints. A project with unclear power timing, unresolved water risk, or weak permitting durability is harder to finance on standard assumptions. That changes what executive leadership needs to do before a project enters a capital process. The old model allowed teams to solve problems sequentially. Real estate secured the site, energy handled power, legal handled permitting, finance structured the deal. Ropes and Gray's May 2026 analysis of data center investment described how that model has changed. Power availability, not capital, is now the principal driver of investment decisions. And critically, a utility's will serve letter does not equal powered land. What matters is a contract for transmission capacity by a date certain. Capital cannot solve infrastructure problems after the fact. It can only fund projects where those problems have already been resolved. The Q3 planning question isn't whether capital is available. It is whether the project has resolved the physical conditions capital requires to deploy. Power by a date certain. Water availability confirmed under local conditions. A permitting strategy that accounts for community and political risk, not just regulatory process. A capital structure sequenced against actual infrastructure timelines rather than optimistic ones. Those questions used to belong to separate teams working on separate tracks. In the constraint economy, they belong in the same room before the investment is committed, not discovered one by one after it is. Sustainability Soundbites energy coverage is sponsored by Amazon. Visit the link in our show notes to learn more about Amazon's spotlight on energy. For sponsorship opportunities with Environment and Energy Leader, please reach out to a member of our team.